We had been identifying, as you just mentioned, at least since 2014, that there is a looming problem in the banking sector. The government took its time, the Reserve Bank took its time, not only to accept that there was a problem, but then to come up with a solution. The solutions of, putting in a bankruptcy code, etc., those are all the right things to do, but they also must recognize that it takes a very, very long time for these kinds of structural reforms to actually start loosening or correcting the problem. And the fact that it hadn't been corrected meant that the non-bank financing part of the economy also got, also got affected by it. And now we are in a mess where both the banking and the non-banking sector is in a serious problem. The government keeps on providing the same solution, which is, well, we are going to use the bankruptcy code. We are going to put in a little bit of capital here, a little bit of capital there, rather than addressing the problems squarely and saying that, look, this is a urgent, immediate solution, requires an immediate solutions, and let's solve the problem. It might be a dirty solution, it might be something that it is not nice and aesthetically pleasing, but it's but we need to find and look for such solutions.
A bad bank-like solution.
Yeah, I mean, look, we can try and create a bad bank outside of the banking sector, or we can do what every other, not just emerging market country, developing country central bankers have been doing for the last 5, 6, 7 years. I mean, it's now become part of the banking sector or the banking solutions. You basically socialize the bad loans directly onto the Reserve Bank's balance sheet.
You still think they can do that? I mean, even after the balance sheet review, whatever additional, sort of extra capital was considered as excess was passed on?
I mean, why go into this convoluted solution of putting together a committee and then trying to get part of the capital onto the government's balance sheet and then using that capital to recapitalize the banks? Reserve Bank of India, just like every other central bank, PBOC, of course, all the G3 central banks, takes over the bad banks onto his balance sheet and then negotiates with the corporates as part of the banking sector, the bankruptcy courts, but it is Reserve Bank that does it with the corporates, with the debtors, and Reserve Bank, with the creditors, and Reserve Bank does it with the bank, within the parameters of the bankruptcy laws, rather than individual banks. But in the meantime, these banks actually get a massive relief. In exchange for that, the RBI can do what it's always wanted to do: put together an actual governance system within these commercial banks, which they think should work. So rather than worry about and keep on going back and saying, well, there's a problem with the governance of the state-owned banks, here's a solution. You give them you take away the bad loans, and in exchange for that, you ask them to carry out the kind of internal changes that the Reserve Bank, as a regulator, wants them to do.